Welcome back, everybody, for another deep dive. Today, we're going to be looking at this crazy jobs report that came out for November and trying to figure out what it all means for interest rates.
Yeah.
And this is kind of interesting because it seems like the Fed's poised to cut rates.
Oh, yeah.
Even though we have a lot of job growth.
This is a strange one for sure.
Yeah, it's a strange one. It doesn't quite make sense.
Right.
So, maybe we should just start with what the heck is in the November jobs report.
Sure. Lay it on.
We added 227,000 net new jobs.
That's a big number.
Which is
it's huge.
A big number.
Yeah.
A lot bigger than people were expecting.
Way bigger.
And so that's good news.
Sounds like good news.
Right. But unemployment went up from 4.1% to 4.2%. So more jobs, more unemployment. What is going on?
Well, it's funny how these things happen.
Yeah.
You have to look at it a little more granularly.
Okay.
So first of all, 227,000 jobs.
Yeah.
Like you said, that's really strong.
Yeah.
It surpassed all expectations.
Right.
We saw a lot of these gains in healthcare, leisure, and hospitality, which I think is really interesting.
Oh, it is interesting.
It suggests that people are feeling pretty confident to spend money on, things like travel, entertainment, maybe consumers are shifting their spending habits. Prioritizing experiences over goods.
Okay, I like that. That's a good point.
Yeah.
Yeah. But the unemployment rate going up is weird.
Yeah, it does seem a little counterintuitive at first.
Yeah.
But it does make sense if you consider the labor force participation rate.
Okay.
More people started looking for work.
Oh, right.
So even though many of them found jobs,
that
overall pool of unemployed individuals grew slightly.
Okay, that makes sense.
Yeah.
So more people are getting into the game.
Exactly.
Which is overall a good thing.
Yeah.
But now let's talk about the Fed.
Yeah.
Why on earth are they thinking about cutting interest rates when it seems like the economy is doing pretty well?
Well, they're looking at a lot of factors. And, one thing that they're really keeping an eye on is wage growth.
Okay.
Which is currently at about 4%.
Yeah.
And they want to prevent wages from, spiraling upwards too quickly and causing inflation.
So they're being very cautious.
Yes, exactly. They're trying to keep things from overheating.
Okay.
Another thing that they're considering is consumer confidence, which has stabilized recently.
Okay.
So they want to make sure consumers are feeling good because when consumers are confident, they spend money.
Right.
And that, keeps the economy growing.
Yeah, keeps the wheels turning.
Exactly.
So what did the market think about this?
Well, the markets kind of reacted in a surprising way before the jobs report came out.
Yeah.
The market was predicting a 70.1% chance of a 0.25% rate cut at the December meeting.
Okay.
But after the report, that percentage jumped up to 87.1.
Wow.
So a pretty big jump.
A strong jobs report made a rate cut more likely.
Yeah. You wouldn't normally expect that. But it seems like the markets are putting more weight on those other factors we were talking about, like wage growth and consumer confidence.
Okay, so what's the most likely scenario here?
Well, I think it's highly probable that we'll see a rate cut in December, bringing the Fed funds rate down to 4.5%. And then after that, I think the Fed will probably pause in January and just kind of take stock of everything. See how that rate cut is impacting the economy.
Right.
And see what kind of data is coming in over the next few weeks.
The waiting game. So we have a strong economy, but the Fed is being cautious.
Yes. Very interesting times.
It's very strange. So this kind of leads me to a question for our listeners. What happens if the job market keeps being strong?
Yeah.
Like really strong?
Right.
Do you think the Fed will change course and start raising rates?
That's a good question.
Yeah, something to think about.
I think it's definitely possible. If we see inflation start to tick up.
Right.
Or if the job market gets so hot that it starts to put upward pressure on wages, then the Fed might have to rethink its strategy.
Yeah, for sure.
It's going to be interesting to see how it plays out.
Yeah, well, thanks for joining us.
Yeah, thanks for having me.
On this deep dive, I think this was a really interesting one.
I agree.
And hopefully we gave you all something to think about. So don't forget to subscribe and follow the show. We'll be back with more in-depth analysis soon.
Sounds good.
See ya.
See ya.